Hello friends, hope you all have had a very good day. Today it was an exciting day for all intraday traders, I believe, even the investors, because market after long, all nifty indices were at green. To be precise, Nifty 50, that was positive in 100 points, Bank Nifty with a 217 points positive. Nifty private banks, they were also up as well, 160 points. And the most that went up today was Nifty FMCG, almost by 550 points. It closed at 550 points positive, but during the day I had also seen it around 600. I have had a good trading session today, although I don't go live trading because of my superstitious belief or whatever, but hopefully I'll get live with you guys soon and make some money together. What say? So let's get started with today's topic, that is the IPO of Yatharth Hospital and Trauma Care Services. So this IPO was just launched today. It's going to be from 26th of July, which is today, until 28th of July. The price band, the company has kept it in the range of 285 to 300 for each share. Every individual investor that wants to buy shares into Yatharth Hospital needs to purchase minimum of 50. That's one lot. The total issue size of this IPO is 2 crore 37 lakhs and 44,672. Let's move on to their financials and understand how and how much is Yatharth Hospital going to get from this IPO, and in which segment they are going to invest that money, and how they are going to use this IPO money to improve their business. Also, this being in the healthcare sector, it has caught the interest of many retail buyers, QIBs, means qualified institutional buyers. So what I found out from my sources and even from the news channel was that Yatharth Hospital has already been subscribed on the first day, that is today, 26th of July. 85% is already done. So I see that there is a excitement in the people to buy, to invest into IPOs. But what I understand is, the first thing before you get into any IPO, or even if you just not IPO, even if you want to invest in any share, you have to understand the basics of the company and the financials, the directors, the CEO, what they think, where they want to take this business. And you should understand from the prospect of the company as well, the market of it. So hospital in India, healthcare sector, where there are 140 crore people living in this country, hospitals are not going to go down. So that may be one of the key reasons for this 85% subscription on the first day. So let's get started. As you can see on the screen, you'll see the IPO size. It's of 687 crores, the total IPO size. Offer for sale. What's this offer for sale? Offer for sale is the amount the promoters are going to sell from their own end, from their side of the shares. That's worth 197 crores of shares that are on sale, and fresh issue was done of 490 crores, which adds up to be the IPO size, that is 687. As we already discussed, the price band, that will be somewhere between 285 to 300 depending upon the subscription of the people. Coming down to next is the subscription date. We spoke about this. Purpose of the issue. This part struck me a bit, because of which I am having double thoughts for this IPO, that is to repay debt. I usually don't prefer, like, every companies, they have their debt, but if the company is raising money or I am investing in a company, I would want that company to work on their own development in expanding the business or growing the quality of business, and that's what I look forward to. But this company has been cleared from the very beginning that their initial step is to repay the debt. Now many are telling that, okay, repaying the debt is good for the company, it's good for their balance sheet, but yeah, there is a point that even if he repays the debt, he can pick a fresh lot of debt and work on the improvement part. But I usually prefer that where I invest, the money should go into more, like, into the development. So moving on to next is the market cap. So post IPO, that is after the IPO, Yatharth Hospital is going to have a market cap of 2,576, which is good for the amount they are raising. It's 687, so it's like almost 1,900 around their market cap now. So I believe it's good. Net worth is of 673 crores. Promoters are holding 66.3 crores. This is a positive part. We always need to check that after the IPO or during the IPO, how many percentage of share do the promoters hold. What happens with that? See, if the promoters is having more share in their position, they are going to be they'll be more responsible towards it, because they have 66%, so they are going to work to get their 66% to the higher valuation, and if needed, sell then or issue more shares into the market. So that's how it works. But if during the IPO the promoter is having somewhere around 40% share, or take it even less, or maybe 45, or somewhere around that, that means the promoter is trying to escape from that business. He is not keeping the majority of the share. He is selling it off to the retail, like me, you, to other investors that are just wanting to purchase. So we need to always make sure that the promoter holdings are the major holdings for any company you invest. Then comes to the price earning ratio, the PE ratio, that is 39.2. Wouldn't say it bad, it's all right. Coming down to price book ratio, PB ratio. So PB ratio is 3.8. Usually it's considered that PB ratio under 3 is not me who's telling this, it's all the big financial analysts and other experts in the financial market. They believe the PB ratio under 3 or at 3 is an indication of very good, like a good company or a good business. But this has 3.8. I don't know how badly or how negatively it's going to impact the entire thing, but I am okay with it with 3.8. Moving to the next is the financial history. This is another key segment, that is the revenue for 3 years, that is 2023, 2022 and 2021 has been disclosed. So in 2021 they had a revenue of 229 crores, and on 2022 that jumped to 401 crore, which in 2023 turned 520. Now if you see in the revenue, the time span between 2021 and 2022, there was a big jump from 229 to direct 400. It's almost like a 2x gain in revenue. There can be various reasons for that, maybe the post-pandemic situations and during the pandemic situation. So considering all of that, it has jumped quite a good amount. But when you see again 2023, the revenue has slowed down from 400 to 520, which is approximately 119 crore they jumped. Considering this, they are having a revenue growth, but this revenue growth is not stable. So if we consider from 200 to 400 and from 400 to 500, so the next maybe somewhere just around 600. So that will be like maybe 80 crores gain or 100 crore gain. So the revenue is all right. EBIT is the earning before interest and taxes. Be careful that EBIT and EBITDA is not the same. So EBIT for 2021 is 46, 2022 is 83, and 2023 is 106. So it's the earning before interest and taxes. What amount of money you are earning before the tax you pay, before any interests you pay. So for 2021 it is 46, and 2023 it is 106. So it has developed, but the most surprising is between 2021 and 2022, like the double for anything at every angle. Then the PAT, that is profit after tax. After paying all the taxes in 2021, from their revenue of 229, they only profit about 18 crore. Coming to FY 2022, as we have seen, the revenue had doubled, so did the PAT. It actually went more than double, but they had a profit after tax of 44 crore and then 66 crore. So they are having a stable profit, and probably which is going to increase. As I said, we are in a country of 140 crore people, and they are just now based in Noida, this Yatharth Hospital. So probably they're going to expand to other parts of maybe Delhi, maybe central India or parts of India. So they're going to attract more patients for sure, and the profit should increase. They are having a stable increase anyways. Net worth. Your net worth is your net worth, there's a saying. So what's the net worth of this hospital? That is, in 2021 they were at 72 crores. 2022 again a massive jump from 72 to 117, and then 2023 at 183 crores. Now the most crucial, that is the depth. How much has the company taken? That is 186 crore in FY21. Their revenue was 229 and they took a depth of 186. Thereafter, in 2022, their depth increased to 258. Probably they increased the facility, or everything they have increased. Everything jumped twice. So the depth amount also has jumped just almost nearly, not double, that's 186 and this is 258. So not double, but yeah, it has jumped quite a lot. Again in 2023, the things were a bit more under control and it went from 258 to 264, which is not bad. So probably currently we are standing at a depth of 264 and the company is raising from this IPO 687. So if they pay off, I don't think they'll be paying off all of their debt. So maybe about 100 crore they will pay, or maybe a 187 crore. So they'll still have 500 crores for expansion. So what say? 500 crores for expansion. That sounds fair to me. Coming down to some of the key financial ratios, that is ROE, return on equity, that is, they are telling in 3 years average there is a 32.9% return on equity. 2021 had a 25.1%, 2022 had almost 38%, and 2023 had a 36% returns on the equity. Then it comes return on capital employed. So on 2021 they had a 18.4% of return from the capital. Thereafter in 2022 they got a almost 23% return, and thereafter 26% return. EBIT margins were pretty stable with the average 3 years of 20.5, and debt to equity, which is the ratio between your debt and your equity, that is 2.6 for financial year 21. As you can see here that the revenue was 229 and the total debt was 186, because of which they have a debt ratio of 2.6. Now slowly that increased up there, and this also increased, but it increased, the ratio is almost double from the revenue and the debt. So you see the debt to equity ratio has decreased in 2022, and furthermore it has decreased in 2023 with 1.4. So it looks pretty healthy to me. It's an investable business as it's hospital business. I always prefer the healthcare sector because very few circumstances that comes to my mind that a healthcare sector will close down. IT sector may close down, the automotive sector may close down. Close down, I mean slow down, or there can be many disruptive things in that region. But healthcare sector, people are going to fall sick every day. In a 140 crore population, the ratio, if we go to the ratio of average, there is enough number of patient footfall in every hospital, most of the hospitals. So they are into a very booming segment. Considering this segment, this is a very investable business. Considering their depth and all of that, it's not that high. They are getting quite a lot of money. They can clear off their debt, and still they are going to have almost 250 crores in their hand if they clear off all their debt, because according to 2023 their debt lies around 264. So with the money they are receiving, about 687, they can clear off their debts, but I doubt they're going to clear off all. Even if 150 crore they invest, or 184 what we see, they clear off their debt of 184, still they're going to have 500 crores in their hand. So these are some of the key factors that led to this business subscribed about 85% on the very first day. Then some of the key points that I want to point out is that 50% of the total issued shares are reserved for QIBs, that are the qualified institutional buyers. 50% is reserved for them, nothing much said. Then it's 15% for the non-institutional investors, NIIs, 15% for them, and 35% for the retail investors. So it's fair enough distribution, fair enough valuation. So how much do you have to invest to subscribe for this IPO? If you're just buying one lot, considering 50 shares, which is one lot, into 300 is going to give you 15,000. That means you need 15,000 rupees to buy one lot. That's the minimum size of investment you need is 15,000. And what's the maximum? The maximum is 13 lots. every individual can purchase maximum up to 13 lots. And how much will that cost? 13 lots will cost about 1.95 lakhs of money. So invest according to your pocket size and depth. Don't overinvest. There is always new IPOs coming, so save something for those. If there is something like a great IPO maybe coming up, Tata Technologies has told that they will be giving an IPO. I'm waiting for that. So a quick recap on everything that was told. That is, today the IPO started 26th, on 28th it's going to end, so hurry up. Fresh issue of 490 crores, price band between 285 to 300 per share, lot size is 50, per lot is 50 shares, and offer for sale up to 65.51 lakh shares. That's the promoters or the company founders and management, they are releasing shares worth of 65.51 lakh shares. Yeah, they are releasing. Moving on to next part of this is, as I told you, that their main focus is to repay debt, fund capital expenditure expenses for his hospital. So they also plan for their expansion expenditure, how to meet day-to-day end-to-end expenditures of the hospital, and fund inorganic growth. So they also want to utilize the fund in the inorganic growth, not in organic. So inorganic means like getting a brand ambassador, like maybe Virat Kohli, or take it just now Rishabh Pant just came out of all these medical things. I have seen HDFC Life has taken him, and they quoted that life don't give everybody a second chance, because he just had such a big accident and now he's back in practice nets. So that was very good move by HDFC Life. Okay, coming back to this. So inorganic growth is basically anything that you do to attract more patients, more good doctors, more external visitors who are coming for treatment, considering it from maybe other cities. So those are the things that usually comes under the inorganic growth. Okay, social media and all are there, but it's a hospital, so probably they are having good funding. They are going to use more active set of inorganic processes, that is like having a good brand ambassador and creating a ear-racking brand name. Also, general corporate purpose. Okay, so they also want to use this money for general corporate purpose. Now I don't understand what does the general corporate purpose means, but what it tells is the corporate purpose. So probably again the day-to-day running. So they don't have much thing for expansion now. They are not going to expand according to my understanding. They are going to be at Noida, and they are going to just try to gain more footfalls in their hospital. Also, the grey market premium for this IPO is ₹75. So what is grey market premium? If you all think, grey market premium is the amount paid at which initial public offering shares are traded before it is listed on the stock exchange. Did you all get it? No. Okay, so grey market is, okay, let me give an example. Consider a company X fixes its IPO price at ₹90 per share, and its the IPO's grey market premium is ₹50. So when the stock gets listed in the stock market, remember the price of the stock is ₹90 and the grey market premium is 50. So when the stock gets listed in the stock market, it will be listed at 140. Why? 90 plus 50. that gets you 140. So in the same way, considering this, the gray market, so each is going to be 300, which is going to be minus by 75. So the original price of this IPO is 225, and the gray market premium, as I told, is 75. So it comes up to 300. Hope you all found some value from this video. Don't forget to subscribe, like and share. If you know anybody that is willing to invest in Yatharth Hospital IPO or further IPOs, because I'm going to come up with more news on IPOs. So before I end this conversation between you and me, I want to show you the hospital's website. So this is, wait 1 minute. This is how the hospital looks like. You should always know where you are investing and how is it. They have almost 1,006 beds, if I'm not wrong. So this is the hospital. They have 4 hospitals with 1,405 beds and 609 doctors. So they got 4 hospitals. World-class healthcare infrastructure. This is how it looks. They look to be a good hospital. These are the services that they are giving. Specialists on pulmonology, neuroscience, bones and joints, cardiology, plastic surgery, women and child care, trauma and nutrition and healthcare. Okay, so they have pretty all the things that a big hospital needs to have, being a multi-specialist. Procedures also, major all the procedures: open heart bypass surgery, chemotherapy, orthopedics, IVF, gynecology, implant, minimal access laparoscopy, oral teeth. So yeah, it covers major all the aspects. So okay, our location: Noida, Greater Noida, Noida Extension, Jhansi. So 1, 2, 3, 4. Yeah. So these are their 4. Select. Okay, these are their 4 facilities that they got. Now let's come to the management team of Yatharth Hospital. It is very important to find out about the management, like the CEO, the chairman, the director, the managing director, and the other directors, because they are the one who are going to take the crucial decision where the business is going to head. So a strong management means your money is going to get more returns on it. So Dr. Ajay Kumar Tyagi is the chairman of the company. He has been the chairman since the beginning of this company, and he is deliberately eager to develop his hospital even further and go across India. Coming down to the managing director, the MD is another doctor, that's Kapil Kumar, and there is another director, Mr. Yatharth Tyagi. Is it Yatharth on this name of Yatharth Hospital? Never know, it can be a conspiracy or can be the main guy on whose name it has been. So whatever it is the company that we are going to invest in, and Yep. Don't forget to like, subscribe, share with your friends. See you all again tomorrow. I'm going to I'm not going to go for a live trade as I said, but I will be giving some tips on the stock market. Please do your own research before you take anybody's suggestion. Forget about me, but anybody. Let it be even one of the biggest investors or a financial broker. Let it be anybody. Don't forget that your money is under your control only till the time you have it in your pocket or in your bank account. Once you leave it, it's in the market, so it takes some time. See you all. Signing off. Wealthy minds. Stay rich, stay healthy. See you all again. Bye bye.